case. Now, I was saying that we have started chapter 2, and the topic we are looking at is laws, regulation on audit and assurance engagements. So we've looked at the responsibility and the duties of an auditor, the right of an auditor, the appointment of an auditor in our previous class, and how an auditor can be appointed. So we are looking at professional standard. Now, I told us that there are some branches of accounting that has its own standard, and I made mention of international financial reporting standard. It has a standard. You know, that's when you see what we call IFRS 5, IFRS 16, IFRS 18. That will be newly implemented, I think, in 2027. So they have a standard. The same thing is applicable to audit. There is a standard that regulates audit work, and this standard is a global standard. And what is the name of this standard? It's called International Standard on Audit. International Standard on Audit, and this standard is being set or published by International Audit and Assurance Standard Board. They are the ones that will be in charge of setting this standard or developing this standard. Are we together now? Now, this is not only the standard that is this is not the only standard that we use in audit. Just like in financial reporting, you have IAS. There are some IAS that we are still making use of, like IAS 16, IAS 40. And we have IFRS. We also have some standards that are not what? International standard on audit. I will make use of. When we get to the preface to this now, we will see some other standards and what they are trying to address. Am I communicating? Now, are we together? So let's now go to the process and issue involved in standard setting at national level. You know, the standard will be set. Am I communicating now? Now, let's look at the issues. The process and the issues involved in standard setting at national level. Now, we are looking at how a standard can be developed, or what can lead to you setting a standard, or to those in charge of setting standard. What can happen? Are we together now? Now, you know, before IFRS 18 came into existence, it was addressing a particular issue, and the main issue was listed out in that standard. Don't worry, I won't talk about it. We'll teach you. So before you set a standard, you can't just the people in charge of standard can't just sleep and wake up and say they want to develop a standard. That means there must be identification of subject matter. That means issue that they want to address. So if there is no issue that needs to be addressed, or a subject matter that needs to be addressed, what happens? They won't any additional or new standard. Now, you agree with me before that we have I-16 and we have I-32. Both of them are assets, are under non-current assets. But you will see that I-16 came into existence first before what? I-38. Why? Because when they discover that it is not only tangible asset that you use for the production or for any services, they now say there is a item that is called what? Intangible asset, that I-16 does not what? Capture. Am I communicating now? So the process or issues, that means there must be what? A subject matter. You must identify a subject matter that you want to resolve, or you want that standard to address. Are we together? Now, that is one. There must be identification of what? Of subjects or issues that may require what? The standard. So if there is no subject or there is no issue, there won't be need for what? For the development of what? Of any new standard. Am I communicating now? So if there is now a subject matter that needs to be addressed, am I communicating? If there is a new standard, look at it now. Who can tell me the reason why? Who can tell me the reason why IFRS 16? Who know what is IFRS 16? What is IFRS 16? IFRS 16 lease. Thank you. Do you know that IAS 15 before addressed lease? IAS 15 addressed lease. IAS 15 was actually talking about lease. But there is an aspect where IAS 16 fails because IAS 16 does not recognize operating lease. And operating lease has been a major issue that companies may not have asset. They may have an operating, they may acquire an asset through what? Through operating lease. Now, IAS 16 came to what? IFRS 16 came into existence to address what? The shortfalls of IAS 15. Are we together now? Now, after you have addressed the issue, that standard will not just arise. Are we together now? It will not just come because there is a problem. Okay, there is already what? A standard in place. No. That means you must set up a committee. There must be a committee that must be set up. That committee may be set up by who? By the International Audit and Assurance Standard Board. That will look at the issue. They will review the issue. Am I communicating now? They will look at the issue. That means they are working towards resolving that issue. They work. Look at IFRS 15. Revenue from contracts from customers now. Are we together now? It combines all the standard that has to do with revenue before into a single what? A single standard. Are we together now? Now, that means if an issue has arisen, you will now set up a committee or a group to study that issue or that subject matter that require a standard. Are we together now? So in that committee now, they will now propose a standard. They will do what? They will propose a standard. And that standard that they have proposed, it is what we call exposure draft. What did I call it? Exposure what? It's not a standard yet. Are we together? It will be called exposure what? Draft. You know, they have identified the issue and they have looked at the issue and they have now created a standard that will address the issue now. That standard that they have created is proposed standard. Are we together now? Is proposed standard. That means it is called what? Exposure draft. So in that exposure draft, the aim, you know, each standard has its own objective. What it intends to what? To achieve. The same thing is applicable to what? To all these standards. Every standard has their own objective or aims or what they want to achieve. So it will be stated in that standard what they want to achieve and the interpretation of terms. And some important things will be included in that standard. Now look at it now. Now, you know they have proposed a standard, and that standard is what refers to exposure what? Draft. You know why they call it exposure draft? It's meaning that once you develop that standard, look at it once you develop that proposed standard, that means it is subjected to what? It is subject to amendment. That means that standard will be given to knowledgeable people or to stakeholders. Look at it now. Do you know that we have Federation of Accountants? And ICANN is part of the International Federation of Accountants. Even this International Audit and Assurance Standard Board, they are part of what? Of what's it called? They are part of International Federation of Accountants. Are we together now? Now, this exposure draft will now be what? That's why what we mean by exposure. What happened? You make it known to the public that this is what we have come. We are able to develop to address this issue. What happened? Once you have not developed that, once the what's it called? The study group or the committee has developed that standard, they will now what? Expose it, give it out to what? To stakeholders, to professional groups, to do what? To review. Now, once they now review, what do they do now? You know, those professional groups may not be part of the committee. It's just like when they are developing what's it called? The new tax law. You know, there are some groups that came together to amend the law. But before it was passed into law, it was actually they will have opening, first hearing, public hearing that they will give to public hearing, that they will read the other law or give a copy of the law to the public to go and look at the shortcomings of that what, or the weaknesses of that standard. So that exposure graph will now be given out to stakeholders to what? To review. So once they review, what they will do is that anywhere they are not satisfied with, they will now make comment on it. Am I communicating? They will make comment on it. That means that exposure graph now, that exposure draft, there will be feedback from the stakeholders that standard has been what? Given to now. Are we together now? Are we together now? You know, the exposure graph is given to who first? To the professional bodies. Now, that means after their comment now, they will now issue that exposure graph to the what? To the public, for the public to also what? Make comments on it. Because you may have knowledge about what the issue is. It is not all accountants, are we together, that are shattered. Even the ones that are not shattered that issue may be affecting, they may have what? A great knowledge about the issue, better than, because it may be what they are practicing on or what they are exposed to on a regular basis. So that's why they don't make the exposure graph only to the professional bodies, also to what? To the public. So the public will also what? Make comments on the exposure what? Draft. So after the whole comment has been gathered, what will now happen? To who? To the committee. The committee will now sit and review what? The comment. An area where amendment is required, they will do what? They will make necessary amendments. Are we together now? Now, you know it's a committee. They can't just issue that, okay, there is a new standard. They will now present that exposure draft that has been amended to the committee in international what do you call are we together now? Or the national bodies. Are we together? Because what we are looking at is how issues and process involved in standard setting at national levels. Are we together? International level too, when you are setting standards, these are how the procedure that must be followed too. Are we together? They will not present it to the what? To the authority or to the committee, to the council that what? That constitute or that set up the what? The committee. What are they presenting it for? They have made necessary adjustments, right? For what? For approval. Now, after the approval now, this is when the report or the standard can now be what? Issued for what? For public consumption. Are we together? Can we see the process now? The process is where there is identification of what? Of subject matter or issue that require what? A standard. Two is that a group or committee will be set up that will be able to what? To review the issue and set up an exposure draft that will address that issue now. And that exposure draft will be made available to what? To professionals that are knowledgeable to what? For their comments. And after that now, the exposure draft will now be issued to the what? For public to make comments also. So after they have made comment, what happened? Necessary amendment or necessary update will be done on that what? On that information that they have gathered or feedback that they have gathered from the comment of the public now. After that now, once they have made the necessary adjustment, what happened? They will not just issue the proposed standard to the public for public consumption. No, it will require the council or the authority that set up that committee in first place. So they will require their approval for them to approve. So it is when they have now given an approval that they can now issue. They can now issue the or publish the standard for public consumption. Now, so these are the process to follow now. I would say that these are the process that we involving in setting standard at national level. So let's go to different stage. You know, even the process has highlighted the stages involved. Are we together? It has highlighted the stages involved. So let's look at the different stage of standard setting at national level. Now, number one stage is the setting agenda. Because how can you bring people together to come and address an issue without an agenda? So there must be setting agenda. There will be planning and implementation of the project. That is what they want to do. They will be developing and setting out guidelines, and there will be issues of exposure draft for comment by stakeholders, and only consultation meetings. So let me come again too. Different stage of standard setting at national stage. Because I want to list it out so that we will now go over it one after the other. One is what? Setting the agenda. Setting the agenda. Two is what? Planning and implementation. Three is what? Is developing and setting out guidelines. 4 is issuance of exposure draft for comment by stakeholders. And 5 is holding consultation meetings. So let's move on. Now, setting agenda. What do you mean by setting agenda? Are we together? That is, setting agenda is the objective of setting a standard. That means, what is the objective we want to achieve? That is the purpose. Are we together? That's what we mean by setting agenda. The objective of setting a new standard must be, that means the purpose. And before the purpose and the objective can be set for a new standard, what happens? That means there must be an issue. And before you can identify that there is issue, that means you have done what? You have gathered information. Are we together now? Now, after setting an agenda, there will now be planning and implementation. Now, you will now be looking at that setting, planning and implementation. Will now be like planning. Who are the people that we need that's going to form the committee? How much will it cost us to set this standard? How much will you call the committee to implement this project? Are we together? These are what we are going to look at as the planning and implementation of the project. Because the project has started. What's the project? Setting a standard. because it's a project. Should we involve other professional what bodies? Are we together with the to work to work along the what along with what the committee? What are you doing now? They have not started. They are planning. Are we together? Yes. So after that now, you will now what? Develop and set out a guideline that must be followed. So guideline will be issued. This is the procedure that you have to what? Follow. Are we together? This is the guideline that will now be necessary. No, it is not. When you are developing a standard, that means the guideline that is subjected to standard A may not be the same for standard B. Do you get what I'm saying? Because it is standard, some standards are not applicable to some companies or to some sectors. There are some standards that are not applicable to some sectors. So you have to what? To set a guideline that the committee or those that you have what? That you have engaged to what? To involve in the project of setting the standard will now what? Follow. So after that now, what happened? That means the committee will now come into what? Implementation, start working now. And they will now what? Because the implementation means that they will now come out with what? With exposure what? Drafts. Are we together now? Don't look at, we are still in implementation. Developing and setting the guideline. The guideline, they will now what? They will now develop an exposure draft rather. That exposure draft now that will be issued now will now be what? Provided to what? To the public. Because it's for public consumption, there must be comments or review or feedback from the what? From the public. That means the public is going to scrutinize the exposure draft. No, now look at it now. The last thing that we will do now, consultation was meeting. Where they what? Where they will now come out to do what? To interact with the interested parties, with multinational companies that these standards are going to what? Affect or they are going to be implementing or putting in use this standard. Are we together now? Are we together? This meeting will be before the standard is being what? Issued out. And after the standard is now issued out, they will still hold what we call post-implementation what? Review. Okay, you have been making use of this standard. What are the what? Areas? Look at it's not a standard actually. Look at this tax reform. Even after it has been passed into law, you will still see Taiwo Oyedele right. Yeah. Still holding meeting with what? With students that wants to protest because of the new tax law. With companies, big companies, calling the media and always involving them. Why? Because they may not understand the aim and the objective or some content of the law. But what we are looking at here is the standard. Are we together? So let's now list out the different stage is what? Setting the standard, right? Are we together now? Setting the what? Setting an agenda rather. Setting an agenda, that means what you want to accomplish. And that means you will have gathered enough information to know whether there is a purpose for setting a new standard. So there will be, you set the agenda, planning and implementation of the project. Because once there is an agenda now, there will now be what? A project that you want to achieve by developing a new standard. So after that now, you will now what? You will now set out a guideline that must be what? Followed. setting that now, the committee will work and all those things. So after working, they will now, there's need for you to issue a what? After developing the exposure draft, are we together now? There will now be issue of what? Exposure draft. What do I refer to as exposure draft? I say is the proposed what? Standard. So this exposure draft will now be provided what? Will be published to the public for their review and for their comment. I mean, there must be feedback from the public, because these are the people that make use of this standard. So after that now, there will now be what we call only what? A consultation what? Meeting with the what? With the stakeholders, with interested what? Parties. Before now issuing the standard out. Even after issuing the standard out, there will still be post what? Implementation review and meeting. So what are you doing the post implementation review for? To know whether the what you have what set the standard for, whether the standard is truly what addressing it or meets the agenda. Are we together? Now let's now go to issues. The major issues in standard settings. What I call it, the major issues. Because it's not as easy as we are looking at it now. There are major issues. Now, we are talking about the agenda. Are we together now? I will say the agenda is the purpose that you want the standard to address. Now, that agenda sometimes may be inconsistent with what the issue is. Are you getting what I'm saying? Because look at it, the objective may be set based on what? Based on personal or the view of those people involved. It may not be addressing the issues. Because in first place, you may say, this is what the issue is, and this is what we have said to be the agenda. That means there's what? The objectivity of the agenda must be considered when setting a standard. What do you mean by objectivity? That means without any personal bias, without errors. That means the information you need to set the agenda is available. If it's available, what happens? That means you are making decision based on the issue, or you are setting an agenda or objective based on the issue. Sometimes you may set an objective may not be in conformity with reality. So the number one important is that if the objective is not properly set or inconsistent with the reality of setting the standard, what happens? That means the whole project will be useless. So let's look at another issue. Is the standard setting board. Is the standard setting board that will be responsible for getting knowledgeable people or professionals that will form the committee to set the standard or to develop an exposure draft. Now, and they will be supervising the committee or the group. Now, if they don't have they don't have the ability to manage the whole process, what happens? The whole standard will be useless.
Is it the board or the committee set up for you?
Who will be managing now? I told you that, okay, let's look at international, let's look at, you want to develop standard on new international standard on what is now. Are we together? People cannot just come together and develop exposure grants. Who is the body responsible is IAASB, that means International Audit Assurance Standard Board. They are the one that will appoint a committee or a group that will come out with exposure draft. But the committee or that group is still what? Is still subjected to what? To the board. That is why when after issuing the exposure draft and doing the other thing, they need the what? The approval of the what? Of the committee of the what? Of the board or the council. So if those people didn't manage the whole process well, using what? They don't have the good governance or the structure to manage the whole process of the standard setting. What happened? The objective of the standard will not be what? Will not be accomplished. Because the standard will not be. Just look at it. You appoint people that are not committed. Are we together? You appoint people that are not committed to the project, that does not have time, or that does not understand the issues or the objective. What will they come out with? So these are the main issues that you need to look at before what? Before setting a what? A standard. Are we together? So let's look at another thing is, you know, they will develop an exposure draft, right? Committee. One of the issues that you have to consider when setting standard is the content of that standard. Just imagine now, everybody know international IS 36. What is IS 36? Impairment of assets, right? That's IS 36. Impairment of assets. Let's say that standard does not define what impairment is or how to measure recoverable amount. You know, recoverable amount is the higher between what? Between fair value less cost of disposal and value in use, right? The higher, you pick the higher. It does not define, it does not. What will happen? You will not even understand what is in the content of that standard. You will not understand it. Look at is it KPMG or PwC that condemned the law, saying that there are some errors in it. Are you getting what I'm saying? I'm not saying you cannot satisfy everybody. And nobody is perfect. You always see. I'm not saying I will.
But I think they are when
that's the issue. That's the problem I have with them. The law has been now been passed into law. When you were doing the public hearing, you are part of the people they will call. Are you there? So you didn't review, you didn't make comments during that time when it's not when it has passed into law that you are now coming out with review of the errors and maybe the people that were supposed to work on it didn't work on it that time. So now it is now they have time to work.
And it's supposed to make their comments and it's not actually the administration.
And you know Taiwan is not working in KPM. It was PwC. Yes, and it's KPM that made that comment. So you know there's a competition within the two. So they go you should understand. Thank God they later went to go and meet the federal revenue chairman to say it's not. They are not challenging that they are just making comment that it's not. Let's continue. So another major issue is that after you have put the what, the standard has come into what has been implemented and has been approved for public consumption. You will not just what the board responsible for that standard will not just go and sleep. That means they want to know how the standard is being what used. Are you getting what I'm saying now? So if look at it now, if we are looking at the issues, if a standard setting now board now develop a standard and after the standard has been used for always consumption, they didn't consult the people making use of that standard to see whether the objective has been achieved. What happened? That means the objective may be what? May not be achieved, and they have set what? The wrong standard. Are we together? And what are they doing that? So that they will know that that standard they have set has meets the what? The desired what? Result. Are we together? Now let's look at the prefix to some standard. You know, I told us that international standard on audit is not only the standard that is relevant or that is applicable to both to audit and assurance. Are we together now? There are some other standards that will tell you the meaning now and what they are applied for. Are we together? I will be telling us the other standard that we have and what they are applied for. Now we have international. Who is responsible for setting the standard? Who is responsible for setting the standard, for issuing standard?
Officer.
Of issuing audit standard.
IASB. IASB.
Audit and assurance. IASB. That means International Audit Assurance Standard Board. So it is not only international standard on audit that they issue. There are other number of what? International standard that they issue.
I'm saying IASB.
Yes, along with IASB. But what they are applied or what other those standards are applied for is different.
Sorry. Okay, all these standards there is IASB, they are also
issue it. Yes.
Okay.
So let's now look at each of the standard. What you know, I just showed the acronym on the board. We'll look at the full meaning of the standard because the first alphabet is big. So once you know the acronym for the standard and what the standard are applied for. So let's go to international standard on auditing. So we call it what? So we call it IAS. So that we can call it ISA. ISA 120, ISA 200. We are going to be looking at it. So now what is it applied to? It's applied to the audit of historic financial information. That means when you want to audit what? Financial statement is applied. That means when you are using it, it's applied to audit of historical financial information. That means when you are auditing what? Financial statements. You know, there are financial statements when you prepare financial statements, it's historical, something that has happened in the past, and it's for the audit of financial statements. That is what is applied to. Look at it now. Let's go to ISRE. What's the full meaning? Now, it is called what? International Standard on Review Engagement. International Standard on Review Engagement. You remember review? There is difference between review and audit. Are we together now? You know, review is only done on a particular item or data. Financial audit is the examination of financial statements. And we know that the scope of audit is more wider than review. We did it in our last class. Audit related what? Services. That it is not audit, it is related to audit. Because the same procedure that you use in auditing, you also apply it. It may not be the same, but it's applied to because it's related to what? To audit. Are we together? So when you are carrying out review engagement, the standard that is applicable is what? International Standard on Review Engagement. We are still going to, when we get to review, we will be talking about these standards.
Applicable
to it is applicable in review, yes. Review of historical is not audit now. Review of historical financial information. Yes, this international standard on review engagement is applicable to what? To review, it's not audit now. You know, ISA was audit of financial information, but this one is review. You know, review is the scope of review is not as wide as audit. You can review the inventory system or the PPE register in an organization. That's review. It's not financial statement.
First, yeah, now you are mentioning this historical financial information. Do you have any other financial that you want to know?
That we are still going to look at. There are some information that you can predict an information that will happen in the future. We call it prospective information. Yes, it can be yes now. We will talk about it later. Someone can help you to prepare feasibility study of what will happen in the future or predict something. An auditor may look at it. It may be given to an auditor to review it because you don't want to rely on it too. So let's look at it now. Let's go to this now. What is the full meaning? International Standard on Assurance Engagement. Can you see now? On what? Assurance Engagement. That means, audit and review are under what? Assurance. Are we together now? I told you assurance means what? Confidence. That means putting credibility to what a third party has prepared. Now, in audit, is it the auditor that will prepare the financial information? That means there will be a party that will be responsible for preparing that information for another party. So that party now, that is the intended user of that information, will engage someone to come and audit or review it. So I told you that assurance, that audit is under what? Is a form of assurance. So international standard on assurance agreement is what? When, look at it now, the application in assurance engagement, other than audit and and review of historical information. Now who can tell me other assurance engagements now? Compilation, agree upon procedure, and other. Are we together? Now what we are saying is that this standard, we already have standard for audit and for review. This international standard on assurance engagement is applicable to what? To other forms of assurance engagement that are not audit and review. Because if it is review, this is international standard on review engagement will be what will be applicable. If it is an audit, it is what? ISA, international standard on audit. Okay. Which place do you not understand? We are telling you that assurance engagement, I told us that audit, review, they are forms of assurance. And we already have a standard for audit, which is international standard on audit. And we already also have a standard, international standard that is applicable to review, which is what? International standard on review engagement. That means there are some other assurance engagements that is not what audit and what review. We talked about agree upon procedure now, right?
Yes.
We talked about compilation. We talked about some other engagements. Are we together? Are we together? So that means this standard is applicable to what? To any other assurance engagement that are not audit or review. Because see, assurance agreement is what? Is plenty. So you can't be creating what? Standard for each of these are major. That's why standard is developed for them. Are we together now? Do you get it now? Okay. Now let's go to. We also have international standard on related services. Related services. You know there are some other like audit related services that what's it called that an auditor also perform that may not be what review or what or audit. So you can also use international standard on related services. So it's applicable to assurance engagement other than what audit and what review. So let's go to this standard.
Applicable to
That
Order.
engagement, other assurance engagement. Let's go to this. This was actually included into ICANN pack last diet. It was formerly there was a standard that was developed for quality control. It is called International Standard on Quality Control. One. Do you get it now? Now that means they have issued a new standard that to address what quality what control. Are we together? Look at it now. Now it was formerly referred to as what international standard of quality control. Now it is not international quality control. So it's part of the new thing that has been incorporated into the new pack. So it is called what now? That means a standard has replaced international standard quality what control and is now called what international standard on quality control management.
Okay, the control is there.
Yes, management. Or you call it international standard on quality management. It should be quality management. Quality management. It's not control, it's a mistake by accident. It's part of the mistake. It should be management. So it's called what? Yes, management.
okay.
International standard on quality management. Yes. It's a new standard. So can you see now? What is it applicable to? On what? Compilation what? Who can tell me the meaning of compilation? What's compilation? Okay. I'm talking compiling what? That means you are not you are not working on the work that another person has worked on. That means you are the one gathering the what? The information. Helping the client to gather what information. It can be what? The preparation of financial statement or preparing an annual report for your client. So you are not giving any forms of what? Of assurance or opinion. You are gathering the information. He said it is applicable to what? Compilation engagement to apply agreement upon procedures to information and other related services engagement. Are we together? So it is applicable to compilation engagement to agree upon procedure engagement and any other related services engagement. So international standard on quality management is applicable to that. Are we together? Now, the issue we will have now be, are we together? So please, when it comes to all this standard, are we together? When it comes to all this standard, you know, the standard is not telling you the work, it's not telling you what you will do. Because all this standard, it will still require your professional judgment because I an auditor. Are we together? And which is part of the quality of an auditor. He's just telling you what you will do. But after you have done that, it will still require you to what? To make what? Professional judgment. Are we together? Look at it now. Let's look at audit. The main primary purpose of an auditor is what? To examine what? Financial statement. That means in examining it now, there's a laid down procedure that has been laid down by the what? By this standard. So making judgment based on what you have what you have examined is not based on the opinion or based on the professional judgment of the auditor to know whether this is material or not this material, or there is true and fair view in what he has examined. So look at it now. The international standard require what? Professional accountant to exercise what? Professional what? Judgment. Are we together? It requires you. Because audit is not only, see, look at the beauty thing that when you get to a part in this course, you'll be seeing all the standard. The standard you are doing in strategic business reporting, they also inculcate it into what you see it. But by then, I will not be teaching you the standard. I will just assume that you have know it because it's a waste of time. Just so you may be giving a case study question in the exam and you see it in audit that is making reference to IFRS 15. They say they can say as an auditor what are the things or procedures that the standard is saying. Please don't be surprised. Are we together? Yes. So I will talk about the. Please, you will see some standard. You will see IS 200. Are we together now? We are still going to come across all these standard by the time we are moving from one chapter to another. So we can't be talking about the standard. Even though if I find time to be explaining the standard, by now you will know what? You will not understand it. Are we together? So they can't ask you question on all these addition or explanation they are giving about the standard. For now, this one. When we get to some topic, are we together? You'll be seeing all these standards, like the content of all these standards. So let's move to corporate governance. Are we together? Let's move to corporate governance. Who can tell me what corporate governance is? What's corporate governance? What's corporate governance? Hey, God. Okay, you don't know it. Corporate governance is how an organization is being what? Is being controlled or directed. That's corporate governance. Are we together? How an organization is being what? Controlled or directed. Are we together? Ways that you are using, and that's why you see in an organization you can have good words. I'm in page. Okay, you are looking for the page. Page 36. So look at it now. That means, are we together? That means in an organization you can have what? Bad governance or good governance. Because if a company is not what? Directed or controlled in a way that that company is going to what? Going to achieve its main objective and goal. You know, every organization has their what? Has their goals and objectives. So if it is not directed in a way to achieve the goals and objectives, that organization has a what? Bad governance. But bad and good is still what? Governance. It's just that the way in which they are using to manage and control the company is not in accordance with what? With the objective of the company. Am I communicating now? Now, why do we need to regulate governance? Need for regulation for good governance. You can see, they say good governance. And I'm telling you what good governance is. That means, if a company is being directed in a way or controlled in a way that it will achieve its what? Its goals and objectives. That means, that's what? That means what they are practicing in that organization is what we call good governance. Are we together? Are we together? Are we together? Now, who is directing and controlling an organization? Okay. Now you are saying that I should come again. Now I'm telling you that governance may be good or bad. Are we together? It is good when a company is directed in a way or controlled in a way that it will achieve is what is main what goals and objective. Man and sir, there is no company that will be operating that will not have mission and vision. Are we well?
Good objective. Sorry, it's a good objective of the shareholders. Good objective of
the company. You are saying company. Company. They will have to go. They will have mission. What they want to achieve. The purpose of the organization. Are we together? The purpose of the organization. So if it is not directed in a way, what happens? That objective of that goal or mission will not be what accomplished. Now look at it now. If a company now is a profit-oriented company, are we together? Let's say an entity is a profit is into profit maximization. You know, it's not all company is into profit maximization. That means whatever they do, what are they going to consider? They are going to consider what profit in anything they do. Even though in doing corporate social responsibility, they are still what looking at the expenses and how it's going to bring what profit to them. You can't say because you want to do profit oriented, you want to do corporate social responsibility, and you do corporate social responsibility where the cost will be more than the revenue of the organization. They are just doing charity work. Are we together now? Now, if it is now a profit oriented company, what happens? That means we are trying to make profit or give return on our investment, make a return on our investment to shareholders. That means if you are not making profits, that means you are not protecting the interest of the shareholders. Because we say in the first place, it is the directors that are that will ensure that the company is well governed. Because corporate governance is saying that how the directors are controlling the business or how are they directing the business. So if they are not controlling the business in this aspect, it means that it may be because their roles are not well defined. Are we together? Their role may not be the responsibility, because corporate governance focus on the roles of directors and their responsibility to the shareholders, especially public limited liability companies now. Are we together? Are we together? Okay. Now we are saying that the need for regulating good corporate governance. With what I've explained, you should know by now the reason why we need to regulate good governance. Are we together? Are we together? Okay, look at this now. I'll read this now. Look at this. He said there are some regulations of corporate governance in corporate law. However, basic legal requirements are proven inadequate for protecting from loss or from corporate scandal and caused by who? Why? Because it's the director that control and direct or manage. It's not a director. We have executive and non-executive directors. It's executive director that is engaged in both in the board and also manage the day-to-day operation of the business. And as I said, the role of board of directors and management is different. Are we together? It's different because the CEO will be the head of the management. But the CEO may not be will not be the head of the board of directors. It's the chairman.
Yes.
And as I said, Tony Elimelu now, which is UBA, is the chairman of the board, but he's not the managing director of UBA. So his own focus will be managing the board, ensuring the business is going to the direction and is well controlled in a way that has been to meet the vision and the mission of establishing the organization. So the board of directors are not there to protect But in the board of directors, some of the executive directors will also be part of the directors, and we also have the non-independent director that we call it non-executive director that are just employed on a part-time basis based on their what? On their past knowledge or experience. Can you see now? Now, we have seen that law is not only what? Law cannot ensure what? Good corporate governance in an organization. Because in law, there's already what? There will still be loopholes. Are we together now? There will still be loopholes that the management can, the management or the directors can use to what? To cause a lot of havoc. You see some organizations now, their directors are embezzling some money that is meant for the organization. Who owns those resources? It's the shareholder. That means the rights of the shareholders are not protected. Are we together? And this is why we now have what? Guideline. Corporate governance what? Code. Are we together? And this code varies from one company, from one sector to another, and from one country to another. Now, in public limited liability company now that is listed on the your share is being traded on the Nigerian Stock Exchange. Who regulates your operation? Security Exchange Commission. They are the one that will lay out the corporate governance code that all these companies will follow. Like for banks, who will develop corporate governance code for banks? CBN, and that CBN, they are the one in charge of implementing BOVIA. They are it's just like a CAMA. CAMA is applicable to the commission. What do you call the commission? CAC. Okay, so let's do much on that. Now let's now look at this now. The need for public oversight and corporate governance principle in audit and assurance practice. You just understand this now. Look at it. It's quite. Look at what we are looking at. You know, part of the corporate governance code is what? Audit is part of it. Are we together now? And that is why in the board of directors, you will also have what we call subsets. Okay, before we go into that, look at this now. Look at this. They said regulation. Look at this. I'm going to need for regulation for good corporate governance. Look at the last paragraph there. Look at the last paragraph. Look at it. I've skipped it. They said regulation and guideline varies from one country to country. In some country, there are details of rules. In some country, there are none. Are we together? Are we together? In some country, there are details. Means they will give you responsibility of the director, what the role of the director should be, how they are going to bring transparency, how they will give you how to make the directors to be what? To be accountable. It's going to be details. But in some countries, they are what? COSI. You don't have what? These guidelines. But look at it now. Look at it. You are not expected to give a detailed knowledge. You are not expected to have, you are not expected to have a detailed knowledge of corporate governance rules for this exam. Are we together? Do you get it now? That means just understand the concept of what? Of corporate governance. You know, corporate governance is wider than you think. I think most of us have done what's it called? CSME. You will see we have about, it should be more than 6 or 7 chapters on corporate governance. It's more than, but we are not expecting you to be now reading because you see corporate governance. No, you don't need to have, you see, they will give you all the guidelines. So they are not saying that you should not understand the concept, or you should not be dropping yourself looking at what detailed knowledge of for the exam. Are we together? That's what I want to establish. Some people will think, I've seen people asking me questions on corporate governance. Now, I just laughing at this exam does not need detailed knowledge about corporate governance now. So, let's continue. Now, let's now move forward. Now, the need for public what? Oversight. The need for public oversight and what? And corporate governance principles in audit assurance practices. Now, look at it now. We still need what? Corporate governance principle in what? Because in one of the principles of corporate governance is what? Accountability, transparency. And how can you bring transparency and accountability? What? Through what? Audit assurance. Look at it. Now, if we inculcate good corporate governance principle in audit and assurance practice now, see what it will ensure. What will it bring? By ensuring there is accountability and transparency in your audit practice, what will it lead to? It will improve audit what? It will improve what? Audit quality. Are we together? It will improve audit quality by ensuring that we are applying what? The best practice. Are we together? Look at it. Look at what I'm saying. Look at what I'm saying. You know we have companies. Look at this so that you will not miss it up. You know we have audit companies, right? We have audit companies now. Those who have audit companies.
Yes.
Audit companies. Yes, and fair. Okay, let me say you are used to that. Audit fair. Fair man company. Audit what? Fair. Now, because it's audit fair, they will not apply good corporate governance to their operation. It also has to be part of their practice. That's what I'm saying. That means in every audit fair, they should inculcate what? Good corporate governance in their practice. By putting it all happen, it will help them to improve the quality of their of the audit. That means they are now following the best practice. Because those that are the team, the audit team that is responsible for running the service in that audit firm now, will now be held accountable. Because they are held accountable now, what will happen? They want to provide a good audit They want to improve their the audit quality. They say, to provide market information on quality of work by fair. It also helps to improve the information you need to provide about the quality of work. Let me just run through it. Look at it now. It also helps practitioners. Who are the practitioners? Auditors. It helps practitioners to improve performance and avoid past mistake. Are we together? Now, they said it also ensures practitioners not only focus on vital risks area identified, but also those areas are monitored and prevented, mitigated. Look at it now. Now we have audit risks. What is audit risks? Audit risk is a risk that the auditor will not give a correct opinion or will give a wrong opinion. That's audit risk. Are we together? Now, when you inculcate corporate governance in your audit practice or assurance practice now, it will ensure, because risk is also part of corporate governance. Are we together? That is why you see that in audit, you not just identify the audit risk, you also control the risk and also reduce the risk or eliminate the risk. So let's now go to responsibility of auditors and the responsibility of an auditor and directors. Are we together? Now it's quite very simple. You know, I've stated it because if you don't understand the responsibility, you may not understand what audit is all about. You know, I was saying it at last class that the directors and the auditors, they are what? They are not what? Their responsibility is different. Because the directors are the one that will pay. The responsibility of the director is to what? They are responsible for preparation of the financial statement. The internal control, prevention, you know, I said it, detection and prevention of errors and fraud is the responsibility of the directors of management, not the auditor. Because it is not all audit or error that are material that the auditor will consider when they discover it. And it's not meant for the auditor to prevent. It can only call the attention of the directors when they come across such. Are we together? So preparing the financial statement and providing relevant information about the financial statement is the responsibility of the director. So what about the responsibility of the auditor? The responsibility of the auditor, we have said it, is what? Examination of financial statement and reports. And writing a report on the financial statement which the auditor has examined. So you now form an opinion on that examination. That is the responsibility of an auditor.
That's responsibility.
Now, you know we are talking about code. Code is one of the regulations or rules that has been put in place by some sectors. You know, we have some sectors that they have what do you call code. Are we together now? Code, that means rules. Some established rules that companies must follow in the sector. Now, we will look at two. I'm not like you may not be asking the exam to do this. I'm just trying to explain now. Now look at it now. We have, we have banks and other financial institutions, right? Now, who regulates? That means there is a code. That code is what? It's guideline or law that is being issued by who regulate their body? CBN. CBN issue this code to them so that if you are operating in what? In the banking sector, you have to follow these what? Two rules. And the code is established mainly for what? To ensure there is good corporate what? Governance within the what? Banking sector. We also have code of corporate governance for public companies. Now, look at it now. Who regulates companies? Public companies. Companies that their shares are being traded on the Nigerian Stock Exchange market is by what? SEC. So SEC government also what? Issue out a code for any company that wants to have their shares to be traded on the Nigerian Stock Exchange market. And this code is the guideline to ensure what? Good corporate governance that will protect the interests of the shareholders and state out the responsibility of the directors and their role and how the directors are going to be made accountable and how the organization is going to ensure transparency. So don't bother yourself much on that. So let's move forward. Let's go to audit committee. Audit committee. Are we together? What did I say? Audit what? Audit committee. Now, look at it now. You know, we have board of directors. Look at it now. We have board of directors. Now, I told her that those are person that is going to be responsible for what? For how an organization is where it will be directed or controlled is who? Is the board of directors. And the board of directors comprises of both what? The executive, are we together? The executive director and non-executive director, we call it independent. And it will be going to be headed by someone. Who do we call that person? It will be going to be headed by the chairman. Are we together? Now, this board of directors are representing the interest of who? Of the shareholders. Are we together? Now, in this board of directors, we are going to have some subcommittee. Are we together? Subcommittee, and one of the major committee that is going to be part, that is going to be in the board of directors is audit committee. That means those, just like when you are in House of Assembly, National Assembly. No, National Assembly can have what? 50 people in House of Assembly. But everybody have his own area of knowledge or interest or experience now. Now, they cannot form a committee, maybe a committee that is going to be formed of 3 or 5 people that have what? An understanding in what? Or knowledgeable in that area. On security now. You get what I'm saying now? Committee on security. We have someone, we have like 5 people. Those people that we put on security must be knowledgeable what? Or understand what? Security. We are going to have committee on what? On budget. The same thing is happening to the board of directors too. So all the members cannot be in the same what? Committee. So if we know that you are knowledgeable, we now what? You will be part of the members that will form the what? The audit committee. So audit committee is a subset of the what? Of the board of directors. And who do they report to? They report to the board. Just like when you are submitting a report to the house, as committee, you report it to the whole house. Are we together? Page 39. 39. Now, those members that is going to be in the audit committee must be what? Financially or literate. They must have knowledge about finance. Are we together? And at least one member of that audit committee must belong to us one recognized professional body, maybe ICANN, maybe ANA. Are we together now? Are we together?
Yes.
So let's look at the responsibility. So let's look at the composition of of audit committee. Now we have the audit committee is going to comprise of what? Of 5 what? Persons according to CAMA. You know what we use in Nigeria in regulating companies is what? CAMA Alliance Matter what? Act now. Company Alliance Matter Act. I'm still saying CAMA. CAMA means Companies Alliance Matter Act. So we are going to have what? The composition means that you have at least, it's going to comprise of at least 5 what? Members. I want to for you to have balance, it will comprise of what? 3 that is member of the company, that is executive directors. While 2 is going to be non-executive directors, and which we call what? Independent directors. 5 persons, 3 executive directors, and 2 non-executive directors. I said the audit committee now. The composition of the audit committee is going to comprise of 5 members. And that 5 members to have balance. Because if everyone, look at it now, if everyone is executive director, and let's say the managing director of that company is part of the audit committee, what will happen? That means before even they discuss anything at the committee, they have agreed on it. That means they can be ruled by one person that is their organ within the organization. And that's why there must be a balance. That 5 person will be what? 3 members of the company, that means executive what? Directors. While 2 non-executive directors, 3 plus 2 will give us 5. Now, the Audit committee, they are not entitled to what? To any what? Payment. They are not entitled to what? To, because they are audit committee now, they are now entitled to what? We call it enumeration or salary or any payment in any form. They are no, they are not entitled to it. Are we together now? Are we together? Are we together?
Yes, sir.
So let's look at the responsibility now, and it can be reappointed annually. So let's look at the duties and responsibility of the audit committee. Now, their duty and responsibilities, they help in assisting the integrity of the company financial statement because they are knowledgeable people. Are we together now? All members of the, look at it now, the members of the board of directors may not understand this accounting standard. They don't know whether the financial statement is presented in accordance with IS 16 or how the investment property was presented in the financial statement. Some people may not have an understanding of the rules or the procedure to follow. So that says the gift they assist in protecting the integrity of the company's financial statement. Not only financial statement, in compliance with what? Rules and regulation. Are we together? Now, they also help in assisting the qualification of external auditor. So anything that has to concern audit, they have an oversight. They have an oversight function to do. So the qualification, whether an auditor is qualified or not, they are the one that will verify. Are we together now? Now, they also ensure that that external auditor has an independent. It is not under the pressure or under the authority of the management or the executive directors. Because the executive directors are the one that will ensure the day-to-day operation of the business. Are we together now? They establish an internal audit function. That means, look at it now. They exhibit what? They establish an internal audit function. That means they are the one. Look at it now. The responsibility of ensuring. Look at it. The responsibility of ensuring effective internal control system within an organization is also what? Is passed to them by the board of directors. Are we together? So sometimes they also carry out appraisal to check whether the internal control system is what? Is strong or weak. Are we together? They also help in overseeing the process the process of identifying what? Of identifying fraud, significant fraud or risk in an organization. And they now ensure that the risk or the fraud is what? Is prevented. Are we together? Now they also have we're looking at the duty and the right. At least on an annual basis, they obtain and review report of the internal auditors. Do you get it now? Because part of their responsibility is to ensure or to establish what? Audit, internal audit function or department. So so the internal auditors will also be what? Will be reporting to them. Will write a report to them, and that report will be reviewed by what? By them. Now you know that who audits the financial statement? The auditor. That means the audited financial statement will also be what? Given to them, and they discuss the what? At their own meeting, they will discuss the audited financial statement. With who? With the management and the what? And the external auditor. Because the management are the one that will prepare the financial statement. The external auditor is the one that will audit the financial statement. Are we together? Now, sometimes, we are saying they meet to discuss the audited financial statement. There are sometimes when they meet separately with the management. Are we together now? They may meet separately with who? With the management, or with the external auditor, or with the what? With the internal auditor. It's part of their duties. So, not only discussing financial statement with all of them, they can also meet separately with this individual. They also ensure and review adequate whistle blowing procedures. And they are going to put in place so that those people that will be whistleblowing, they will also be protected. And the procedures to whistleblow issues in the organization will also be laid down by the organization. There was a time when Nigeria adopted whistleblowing policy. Okay, you are saying they will say they will give you money when you corruption, when you whistleblow, there's a part, a percentage that they will give to you. So you can take a role of whistleblowing all these big politicians, checking where they keep the money and when the money is being stolen. So, please, lastly, I'm not looking at everything, but at least seven at least. Out of 15, you should know 7 or 8. If you don't want to know 10, know 7. And this thing is easy for you to remember. Look at it now. Lastly, they also want as skills of function. I don't want to dwell much on this. They also want to report regularly to who? Because they are subcommittee of the board of directors. So the board is still what? They will still be reporting to the board. Are we together? So I will look at the additional responsibility. So let's move forward now. So let's move forward. Now let's go to money laundering, which is the last aspect of this topic. We are moving gradually now. We are in chapter. By the time we are through with this, we'll move to what? Chapter 3. And chapter 3 should be professional conduct of code of professional conduct or fundamental principles, whatever you call it. Now let's move forward. What is money laundering? Sometimes money laundering is referred to as what? They call it what? Dirty money. It's not because the money is dirty. It's because the source that you are getting that money from is a criminal activity. It's truly criminal activity. So we refer to as dirty money as what? As money laundering. And when we say money laundering, is the process at which money is earned from what? Criminal activities. So if they say your money is clean, what they mean? That means you are getting it from what? From a legal or legitimate what? Source. Now, let's now look at the example of money laundering now. It's very common. I will tell you. Drug or trafficking is money laundering. Terrorism, I will together, is money laundering. Are we together? Money laundering, kidnapping is money laundering. All these bandits that are kidnapping people to get. There are some people sponsoring them. Let me give an example. Someone can establish a clubhouse. Look at it now. They can establish a clubhouse. And in that clubhouse now, look at it now. In that clubhouse, what they may be doing mostly, they are getting their revenue from maybe sales of cocaine. They are just using that clubhouse to cover. That's why you don't follow. This person is making it. He's making it. Don't go and make. So now let's move now to Now, let's go to obtaining place on professional companies now. Look at it now. What I say? Obligation placed on professional firms. The professional firms we are saying is not only accountants. So, are we together now? Auditors, are we together now? Look at it now. Look at it. There's an obligation. That means if you are an accountant or an auditor, maybe through the what? Through carrying out your activities or your engagement with your client, you now discover that your client is into what? Money laundering. Are we together now? Money laundering. What is it expected for you to do? You are expected to what? To detect and report. That means investigate where, gather information about the money laundering activities and report it to who? To the appropriate authority. Are we together now? Are we together? Now, as an auditor, it is mandatory for you to, when carrying out an audit, that you should put in place what? System. You should put in place what? Procedures and control in place that will enable you to what? To identify what? Money laundering. That is to ensure that your client is not into what? Into money laundering. Are we together? Are we together? Are we together? Now, now look at the obligation that is placed on it. You know, we are talking about the obligation placed on professional firms when they come across what you call money laundering. What I say now? I said they should put what? System, procedure and control in place to enable them to identify money laundering. And if there is any money laundering activities that they have detected, they should report it what? To the appropriate what? Authority. Those are obligations that is expected to them to do when they discover that there is money laundering. And they should also what? Train their staff. They should train their staff or their audit team about what? About how to detect or the procedure that will be used to detect what? Money laundering and how to report money laundering. It's part of their obligation as a professional firm. Are we together? 47. Are we together?
What's the topic?
Money laundering.
Like, okay, obligations based on professional.
Yes.
Okay.
Yes. So let's continue. Hello, let's continue. Let's now go to duty. Now, we are talking about obligation. We are done with the obligation. We are duties of what's it called? Confidentiality and money laundering. So let's look at duties of confidentiality and money laundering. Look at it. Look at it very carefully. Look at this. It means that if you discover your client is into money laundering and you try to what? To detect and now report it to the appropriate authority. What's that? Because you have professional code of conduct, and out of that professional code of conduct there is what? There is confidentiality there. And confidentiality means that any transfer, any information that you come across during the what? During the work that you are carrying out for your client, that you should not disclose it except it is what? Required by law, or that disclosure is what is permitted by your client. But look at it now. Now the law has made it mandatory that it is required by law when you discover that there is money laundering involved. Even you as a person, whenever that money laundering activity is even discovered that is not true, you will still be protected because you are carrying out a duty that is what required by what by law. And look at it now. If you now decide that this your let's say this your client, you now discover that this your client is into money laundering, but because I don't want to engage or I don't want to report, you now decide to withdraw or to resign from that engagement. You will see what? You will see disclose it. You know why? Because remember, I'm linking this together. Resignation of an auditor means that if an auditor wants to resign, he will stay. He will write a notice of resignation to the register office and write a statement of circumstances that surround him or that made him to resign.
Yes.
And if he's stating it, what is he doing?
It's still reporting.
He's disclosing it. Are we together? So it is not an offense for you to report what? Are we together? For you to report money laundering issue. If there's any aspect of an auditor or an accountant that is not clear to you or the process of what? Of handling money laundering or disclosure, you should what they say you should do? You can contact a legal practitioner. Are we together? You can contact a legal practitioner for what? For ways to what? To handle these legal money laundering issues. Are we together? Are we together? So you may take what advice from the solicitor or lawyer about how to handle the money laundering issue. So we have come to the end of this chapter.